All right, ready to dive in. Today, we're tackling Samvardhana Motherson International Limited, SAML. We've got their Q3 2024-24-25 reports, and let me tell you, these things are a beast.
Oh, they're dense?
But that's why we're here, right? To break it down, pull out the nuggets of gold, the stuff investors actually care about.
Yeah, and there's a lot to unpack with Saml. They're known for those automotive parts, but they're really branching out.
Yeah, like Airbus. Tier 1 supplier for Airbus commercial aircraft. I was floored. Didn't see that coming.
It's a pretty bold move. Shows you how they're thinking, right? Diversifying, not putting all their eggs in one basket.
Okay, you've got my attention. Lay it on me. What's the big picture?
Well, even with global car production kind of slumping, Saml's revenue shot up 8% year on year.
Seriously?
Seriously, 27,666 crores. That's a lot of zeros.
That's a lot of zeros. That's a lot of resilience, especially considering the state of the auto industry right now. What about their bottom line? Did profits take a hit?
Not really, no. Their EBITDA, which is a good way to gauge profitability, grew 20%. Hit 2,776 crores. Shows they're managing costs well.
So not just surviving, thriving. Color me impressed. But zoom out for a sec. What kind of economic headwinds is SAML up against?
It's a bit of a mixed bag globally, to be honest. Supply chains are showing signs of stabilizing, which is good, but there's still a lot of volatility out there.
Right, like walking a tightrope.
Yeah.
What about the auto industry specifically? What's impacting SAML's core business?
Passenger vehicle volumes, pretty much flat globally year on year. Commercial vehicles actually took a dip.
Not great.
No, and it hit Europe and North America pretty hard, which obviously has ripple effects.
So wait, SAML's revenue is up 8% despite all that. They're outperforming the market.
They are making smart moves, that's for sure. It's interesting, though, China and India actually saw growth in auto production, so, it's not all doom and gloom.
It's like a global chess game. Okay, let's talk EVs. Gotta ask, how's SAML gearing up for the electric revolution?
Oh, they're not ignoring it, trust me. EVs and hybrids, they're on the rise everywhere. Saml's weaving that into their long-term strategy.
Okay, good to know. What are they actually doing, though? Concrete steps.
They're making moves, acquisitions, for example. At Sumitech, Baldi Auto.
Hold up, acquisitions. What's the logic there?
Diversification, for one. Vertical integration, too. Key strategies for staying ahead of the curve.
Remind me, what's vertical integration again? And why should I, as an investor, care?
It's bringing more of the supply chain in-house. So instead of depending on outside suppliers for parts, Saml's doing it themselves.
So more control, basically.
Right. Streamlined operations, maybe more efficiency, better profits, potentially. Also, they can control costs and quality better.
Less risk, too, right?
Yeah.
If those global supply chains act up again.
Exactly.
Smart. So acquisitions, check. What else is up their sleeve?
Joint ventures, teaming up strategically like they did with Sanko and Matsui in Japan.
Joint ventures, acquisitions. Sounds like a spending spree.
Yeah.
Are they going overboard?
Nah, they're being strategic. Remember, they actually lowered their capital expenditure guidance for this fiscal year, FY25, to keep things in line with the market. Balancing act.
Yeah.
Smart.
Okay, what else has been keeping them busy?
Packaging. They're beefing up their packaging business under their logistics solutions division.
Makes sense. Sustainable, efficient supply chains. Investors love that stuff.
Oh, and get this. Consumer electronics. They launched their first plant.
Consumer electronics. Wow, that's a curveball. Is that part of their emerging businesses thing?
Yep. It shows they're serious about going beyond just automotive.
I'm intrigued. Tell me more.
And financially, they're in a great spot. They've deleveraged significantly.
Good news for investors, right? Less debt equals less risk, especially now with everything so up in the air.
You got it. Strong balance sheet means flexibility. They can make those strategic investments, weather any storms coming their way.
Sounds good so far. Diversifying, financially sound, strategic. They're checking all the boxes. But let's zoom in on the existing businesses. How are their different divisions doing?
Great question. This is where things get interesting. All 5 of their divisions, they all posted year-on-year revenue growth.
All 5. That's got to be tough given the overall trends we talked about.
It is. And there's some variation in profitability, of course. Wiring harness, integrated assemblies, and get this, emerging businesses. Strong EBITDA growth there.
Emerging businesses already. I figured those would still be babies, just getting started.
You'd think so, but nope. They're contributing to the bottom line in a real way. Shows their diversification strategy is working.
Okay, promising. What about modules and polymer products? They hit a snag there, didn't they?
Some margin pressure, yeah. Unfavorable platform model mix, demand issues, particularly with commercial vehicles in Europe and North America.
Right, those regional slowdowns. But didn't they mention vertical integration as a way to help with that?
That's right. Acquisitions like Atsumitech, they specialize in high-value ad stuff for automotive. More control over their supply chain and costs, that should ease the pressure in the long run.
Gotcha. Balancing act, right. Challenges here, moves to address them there. What about vision systems?
Vision Systems, a bit muted on revenue growth, unfavorable product mix in North America.
Not surprising, given what we talked about.
But get this, they're actually gaining traction with Chinese OEMs, so it's a mixed bag there too.
Makes sense. Regional differences. Okay, enough about the old guard. Let's get back to these emerging businesses. Spill the beans. What's got you so excited?
A lot. The consumer electronics plant. Up and running, production's ramping up. Those other two plants are still on track for FY26 and
They're
FY27.
not messing around. What else is brewing?
Sustainable packaging solutions.
Yep.
India and Europe. Joint venture with Sanko. Brilliant move, if you ask me.
Really? Why?
Think about it. Sustainability's hot right now, so it's good for their image. Plus, it helps them save money on their own packaging costs, and they can sell these solutions to others. New revenue stream.
Triple win. I like it. What else?
Airbus, remember we talked about them being a tier 1 supplier? Well, that's emerging businesses too. They were already doing stuff for Airbus helicopters in space. Now it's commercial aircraft too.
Wow, diversifying within industries.
Yeah.
Smart. Anything else?
Oh yeah, tons. Technology and industrial solutions is taking off too. They've got a new 4G telematics unit, a fancy LCD cluster for motorcycles, and they're winning over customers in cloud optimization, automation, even the Internet of Things.
They're all over the place. It's like automotive parts company doesn't even fit anymore.
More like solutions provider,
Yeah.
right? Across multiple industries, that's what makes them so interesting.
Okay, whoa, that's a lot to digest. Before we keep going, what are your big takeaways so far? What's jumping out at you about Samuel's performance this quarter?
It's their agility, their strategic thinking. They're not just reacting, they're anticipating what's coming next, diversifying geographically across industries. It's impressive.
I agree. Bold moves, but they're not reckless about it.
Right. And that makes you think, what if they keep this up? Could Samuel become a global powerhouse, not just in auto parts, but in all these other areas? It's a question worth asking.
We'll definitely be digging into that in the next part of our deep dive. Stick with us. Okay, let's unpack those acquisitions a bit. Atsumitech and Baldy Auto, what's the story there? Why those specific companies?
With Atsumitech, it's all about expertise. They're a global player in high-value ad machining for automotive, pulling in something like $412 million a year.
Not small potatoes.
Nope. And they specialize in electric power steering systems, drivetrain components, that sort of thing.
So they're getting ahead of the EV curve. Smart, considering where the industry's going.
Exactly. Vertical integration, remember. Bringing more EV component manufacturing in-house. Less reliance on those outside suppliers.
Makes sense. More control, especially these days.
Okay.
Okay, Baldy Auto, what's their deal?
Baldy Auto, they're Italian, focus on those high-end interior and exterior plastic components. Premium car brands, the luxury stuff.
So, moving up market. Ditching the mass market stuff.
Not ditching, expanding. New customer base, stronger position in Europe, adds to their premium offerings.
Like they're adding a penthouse suite to their already impressive building.
That's a good analogy. Catering to a wider range of needs, different market segments.
Okay, so we've got acquisitions, and you mentioned joint ventures before. What's the difference? Why choose one over the other?
Acquisitions are like bringing a company fully into the Samuel family. Joint ventures, more like partnerships. Both sides bring something to the table, share the rewards. Depends on the goal.
And which joint ventures stand out?
Well, we talked about Sanko in Japan, the sustainable packaging, hitting all those sweet spots: environment, cost savings, new revenue.
Home run for sure.
Yeah.
What about Matsui? What do they bring?
Matsuri. Metal stamping, welding, mostly for automotive. This partnership lets Samuel ramp up production in Japan, which is a huge car hub. Plus, they get access to Matsui's technology. Lightweight materials, high-strength steel, that kind of thing.
So not just expanding geographically, but technologically too.
No.
2 birds, 1 stone.
Right.
Building capabilities and reach, essential for competing globally.
So we've got acquisitions, joint ventures, new plants, new markets. It's a lot. But it all points to a company that's not just reacting to change, but driving it.
That's what makes them so exciting to follow. They're not settling, they're pushing, exploring.
It's like growth is baked into their DNA.
I think you're right. They take risks, but calculated risks. They do their homework. They understand the industries they're in.
And that's the takeaway for anyone following Samuel. It's not just the numbers, it's the vision, the adaptability.
Absolutely. It'll be interesting to see how those bets play out, whether they can really become a leader in all these different industries.
Okay, before we go there, let's zoom in on some of those divisional performances, see what's working, what's not.
Good idea. Let's start with wiring harness, one of their biggest, most established businesses. What caught your eye in the report?
Well, even with the global production struggles, they showed some grit. Revenue went from Rs 7,916 crores in Q3 of last year to Rs 7,829 crores this year. Slight dip, but considering everything, that's pretty good.
No.
How about profitability?
EBITDA margin actually went up 11.8% this year compared to 10.8% last year, same quarter.
So revenue down a bit, profitability up. They're managing costs well.
Right. And they're working with other divisions to find new growth avenues. Should see results from that soon.
Internal collaboration, smart, not just sticking to their own lane.
And geographically, they're expanding too.
Yeah.
3 new plants in China, Mexico, those emerging markets.
Makes sense. Go where the growth is, diversify the customer base. Okay, modules and polymer products, that's the one facing headwinds, right?
Yeah, revenue was up. Rs 14,614 crores this year versus Rs 12,754 crores last year.
Healthy growth, but margin pressure. What caused that?
Unfavorable platform model mix, the report said. And demand problems, especially commercial vehicles, Europe and North America again.
Right. Those slowdowns are hitting them hard. They are outperforming the market in India, though.
True. Good sign. Capturing market share, riding that growth wave.
Exactly. And even with the margin squeeze, they're still making a profit. Operational improvements, cost controls.
They're not just sitting there taking it, they're fighting back.
That's what you want to see. Now, Vision Systems, they had some bumps too, right?
Yeah, revenue growth was pretty flat. Product mix issues in North America. EBITDA margin held up okay, 9.2% this year, down a bit from 9.7% last year.
Holding steady, but North America's definitely a watch out.
Agreed. But hey, they're doing well with Chinese OEMs. Could balance things out.
Regional variations. Always got to factor that in. Now, integrated assemblies, if I'm remembering right, that's a newer area for them.
It is. They focus on high-quality, integrated module assembly and logistics, mostly for automotive. Came out of their SAS Auto System Technic GmbH acquisition.
Ah, right. That's starting to make sense now. How are they doing?
Killing it. Double-digit revenue growth. Rs 2,660 crores this year, up from Rs 2,592 crores last year. EBITDA margin jumped to 13.3% compared to 12.4% last year.
Impressive. They really integrated that new business well.
Looks like it. That diverse business model, adding new businesses, it's adding scale and resilience, shows up in their profitability.
Okay, 4 down, 1 to go. Emerging businesses. The exciting one, where all that diversification really shines.
Exactly. And their performance proves they're serious about growing beyond the traditional car market.
All right, let's break it down. Where are they seeing progress?
Well, we've already covered a lot. The consumer electronics push, those sustainable packaging solutions, the Airbus expansion, all big wins, driving growth and diversification.
And they're already seeing positive results, revenue and profit-wise. Anything else happening in this division?
They're doing well in technology and industrial solutions, too. New product launches, bringing in customers in telematics, cloud optimization, even automation.
They're going all in. What about elastomer and precision metal and modules? Any news there?
Elastomer, their rubber and polymer business, expanded overseas for the first time. New facility in the UAE, targeting Europe.
Global expansion, good strategy. What about precision metal and modules?
They make those precise metal components, modules. They just got a new plant up and running. But they did hit a snag with the commercial vehicle slowdown in India.
Ah, so even in their new ventures, they're not immune to market forces.
True, but they're on it. Cost control measures, protecting profitability, adapting.
Good. Shows they're not just chasing growth blindly, they're managing risk.
Exactly. Their emerging businesses' performance shows they can balance growth and risk management. That's essential. Okay, let's shift gears, look at the big picture now. What does the report say about Samuel's future prospects?
One thing that jumps out is their financial strength. They've deleveraged significantly. They're in a great position for this next phase of growth.
That's a big deal, right?
Yeah.
Gives them room to maneuver, keep investing, even if things get bumpy economically.
Exactly. And historically, they've been really good at spotting and capitalizing on trends. Their diversification strategy, geographically and industry-wise, that's proof.
So you're not just riding the waves, they're making new waves.
Precisely. Consumer electronics, aerospace, sustainable packaging, They're not afraid to try new things, see what works.
Okay, strong finances, track record of innovation, bold diversification. What else about their future outlook?
Their R&D spending, it's significant. That's a big plus. They're committed to staying ahead of the technology curve.
Essential, right.
Yeah,
Especially in a
it-
field like automotive that's constantly evolving.
Absolutely. And their sustainability focus with the packaging and other things, that's another good sign. Consumers and investors, they care about that stuff.
It's not just profits anymore, it's about doing good, making a positive impact. Samuel seems to get that.
They do. Thinking long term, which is good to see. Okay, before we jump into the last part, what are your key takeaways? What really resonated with you?
It's their drive to grow, their willingness to embrace change. They don't shy away from challenging the status quo. That's what makes them so interesting to follow.
Couldn't agree more. They're always evolving, adapting, pushing boundaries. It's going to be fascinating to see where they go from here. Okay, let's move on to the last part of our deep dive. Time to explore some potential challenges and opportunities that might be on the horizon for SAML.
All right, so Samuel is crushing it performance-wise, growth strategy, the whole 9 yards. But let's be real, there's always a but, right? What are some potential speed bumps they could hit?
Well, the global economy, right? It's a bit of a roller coaster right now. Inflation, interest rates, all that fun stuff. It's unpredictable.
Yeah, no kidding. Keeps me up at night sometimes. Could those economic factors throw a wrench in Samuel's plans, even with all their diversification?
It's possible. A global slowdown could hit consumer spending, especially on big things like cars. That could have a ripple effect on SAML, even if they're branching out.
Right, they're not in a bubble. What about competition? The auto industry's a tough crowd.
Oh, yeah, it's fierce. SAML's up against established players and those scrappy newcomers, especially in hot areas like EV components and those fancy tech solutions.
So how do they stay ahead? What's their secret sauce?
R&D, research and development, got to be all over that. They can't just follow trends. They got to set them.
Yeah.
Innovation, that's got to have solutions. That's their edge.
Lead the pack, not just keep up. What else should we be watching out for challenge-wise?
Talent, getting the right people, the best engineers, designers, tech folks. Everyone's fighting for them.
Oh yeah, the talent war is real. How does that impact Samuel as they move into all these new areas?
Well, they're diving into cutting-edge tech, right? They need those top minds to make it happen. They got to create a work environment that people are excited about, a place where they can learn, grow, feel valued.
So competitive pay, great culture, all that. Human capital matters just as much as financial capital.
Absolutely. That's true for any company these days. Okay, enough doom and gloom. Let's flip the script. Where do you see the biggest opportunities for SAML to really shine?
Give me the good stuff.
EVs. The electric vehicle market, it's booming. That's opportunity knocking for SAML. As more countries jump on the EV bandwagon, the demand for batteries, motors, charging infrastructure, all of it, it's going to skyrocket.
And Samuel's already positioning themselves with acquisitions like Etsumitech, right?
Smart move. They're becoming a key player in that EV supply chain. Could be huge for them in the years to come.
Front row seat to the EV revolution. But EVs aren't the only thing happening, right? What other trends are working in their favor?
Oh, there's a ton of exciting stuff happening in the automotive world. Autonomous driving, connected cars, that whole shared mobility thing. It's all ripe for disruption, and that means growth.
And these trends need serious tech, which is right up Samuel's alley.
They've already got a good base in sensor, software, data analytics, all that. They're not starting from zero. They're building on what they already have.
Got all the pieces, got to put them together.
And don't forget, their opportunities go beyond just cars. Consumer electronics, aerospace, those logistic solutions, all those have potential.
Diversification. Cast a wide net, see what works.
Yeah.
Their global reach, got to be a big advantage too, right?
Huge. They're not limited to one place. They're strategically planting seeds all over the globe.
So they've got the money, the smarts, the vision, the global reach. Sounds like a recipe for success.
They definitely have the ingredients. But like with any recipe, execution is key. They got to navigate those challenges we talked about, stay flexible, keep innovating.
Well, we've reached the end of our deep dive into Samuel's Q3 performance. It's been a wild ride.
We've seen how they're handling this crazy, constantly changing landscape, embracing new ideas, diversifying like champs, setting themselves up for long-term success.
Samuel is a company that's not afraid to shake things up, aim high, always pushing the limits. Their story so far shows what can happen when you mix a bold vision with a can-do attitude.
So as we wrap up, here's something to chew on. With their solid foundation, that hunger for growth, those ambitious goals, could SAML become a global powerhouse, not just in auto parts, but across multiple industries? Only time will tell, but their track record says they've got the right stuff to reach for the stars.
And on that note, we'll leave you to ponder that question. Thanks for joining us on this deep dive into the world of SAML. Until next time, keep exploring, keep learning, and keep diving deep.